Welcome, and thank you for joining us. You're listening to the Beyond 50 radio program. I'm your host, Daniel Davis. Joining us here on the program today is someone who's going to help us kind of jumpstart ourselves as we try to jumpstart this troubled economy. After all, it wasn't just too long ago that Bill Gates and Warren Buffett themselves says the economy is back on the rise. So what to do about that? How about starting your own business or working for that singular good company that can help you get to where you want to go? The question is how do we find out how to do that? And once we do, what do we do then when it comes to managing it? Joining us here on the Beyond 50 radio program today are two wonderful guests who are author of a book, Warren Buffett's Management Secrets, Proven Tools for Personal and Business Success. And I'd like to welcome to our program Mary Buffett, who is an internationally best-selling author and speaker on the investment methods of Warren Buffett. She also gained her unique insight while married to Warren's youngest son, Peter, for 12 years. And also David Clark, who is also an internationally recognized authority on the subject of Buffettology and the management partner of a private investment group in Omaha, Nebraska, which is where Warren grew up. And I'd like to welcome both of our guests. Mary and David, thank you for joining us here on the Beyond 50 radio program today.
Thank you, Daniel. Happy to be here.
Now, how did you two come together to start collaborating on the series of books that you have written about Warren Buffett and his practices?
Well, my goodness, I don't want to even say how many years ago, but many years ago, David and I, when I was first, actually, I wasn't married to Peter yet. We were courting, and we all were. The family was all in Laguna Beach, California, and David had grown up in Omaha, Nebraska, and had literally gone to camp with the Buffett kids, Susie, Howie, and Peter, and his best friend's mother was Susie Buffett's best friend, and so he and David had always been, a follower of Buffett's methodologies from, I think, the time he was 10 years old. And when we met, I met him with his best friend and a good friend of mine, Bobby Eisenberg, but as soon as we met, it was just instant love. We connected because we both loved business and talked about it, and I just said, who are these characters? And then David moved to San Francisco where Peter and I were living, and David was often a guest at our house, and David and I would be, sitting on the floor on the couch and talking about business, and we'd try and get Peter excited about once we realized when I realized what Warren was doing, and Peter was just said, I'm interested in music. I'm not interested in what my dad was doing. David and I were.
Right.
And once we were divorced, I was kind of besieged by a lot of literary agents and Hollywood types that wanted me to write a tell-all. And I thought that people would be much more interested in how Warren Buffett took $100,000 and turned it into $62 billion. At the time, maybe it was 30. And so I was the qualitative person. I had the stories, I had the access, and David was the quantitative guy, studying Buffett and many other investors. I mean, he is a brilliant analyst. And so I asked him if he'd be interested in writing a book with me, and this is our 6th book, and we are published in 17 different languages, so we're pretty proud of it.
One thing I can say, too, is I read Buffettology, which was about his investment strategies, if you will, and when you take a look at a book like that, and you realize how you can cut through all the garbage that people are fed out there about what the right thing to do with your money is, that investing, although takes a little bit of homework, is also something that doesn't have to be as complicated as they tend to make it seem.
Right. I mean, I always say, look, it's really not rocket scientist, and you point out Buffettology, and in that book, David literally gave the equations that with a $19 calculator, you could calculate what price to buy the superior business, because it's really those two things. It's finding businesses with superior economics working in their favor, and we can go into branding and durable competitive advantages, but it's at the price that you purchase them, and that's Warren's one of the secrets to his success, besides his patience and his discipline.
Mm-hmm. Now, David, because you do run an investment firm in Omaha, Nebraska, it's really interesting when you start off the book here, Warren Buffett's Management Secrets, is that you talk about exactly what you just said here, Mary, was the fact that he tends to find a business that has just really strong economics. And the first, as I was reading that, the first thing I thought of was See's Candies, and then also, of course, American Express, and he found these to where the actual operational value was higher than the actual selling price, and when that selling price was low enough, that's when he would start buying the stock, because he knew that it was being kind of undervalued in a way by what it was being sold on the public. But the other thing, too, that made him successful, and what the key component of this book is as he would look into these companies, management was very important to how they were running the business, because anybody who's, for instance, seen the movie Wall Street with Gordon Gekko, there's plenty of managers out there that have no stake in the company that just suck it dry, but yet they're taking money out of shareholders' pockets. And that was just a taboo. That was a sin, according to Warren.
And we call those buyers financial buyers. They're not really interested in the management. The thing that we found so interesting from a not a business perspective, but sort of from a management perspective, is the best companies to work for are actually the best companies to own long-term for an investment, provided you can get them at the right price. But the companies that you want to be working for, you want to have superior economics. They're the ones that are going to treat you better over the long term and offer you, as an employee, the most opportunities. And that's what we try to convey in this book, Warren Buffett, Management Secrets.
And you are correct in terms of the management, because the whole stock market and the investment world are very short-term oriented. I mean, everybody in that world has to make quarterly, results, yearly results, and so they can't possibly take a long-term point of view. And that's unfortunate for the shareholders, for the investors, because they're not investing with that kind of view that Warren has. And in the Management Secrets of Warren Buffett, the book, our latest book, we really break it down. We always try and break things down so they're very simple to grasp, and we kind of break businesses down in three unique areas: a business that sells a unique product, a business that sells a unique service, or the business that is a low-cost buyer and seller of a product or service that the public is constantly in need of. And we give examples of each one of those, businesses.
Now, let's talk about the actual steps to management that you outline here in the book. When you talk about trying to find the right kind of businesses that offer the greatest career opportunities, you broke it down, as you said, into three areas here. Let's kind of go into a little bit of detail so people have a better understanding of what you mean by that.
Okay. A company that sells a unique product. I mean, this is the world of Coca-Cola, Hershey's, Johnson & Johnson's, Wrigley's, Guinness, Kraft. These are companies that, through the process of the customer's need and promotion and advertising, they're branded. They have little stories in our minds. They own a piece of our minds. So, for 284 years, the Irish, on cool, rainy evenings, think of a pint of Guinness and a warm fire at the local pub. If you want to get a movie for your kids, you probably think of Disney. So those are kinds of products that have durable competitive advantages. They don't have to change their product. They can, increase the price of their product if they need to, because they don't have to pour their money. And they're usually awash in cash. They have consistent and strong earnings. So they're more likely, these special companies, to give generous salaries, buy out other businesses that create opportunities for management and employees, and the like. And then there are companies, the service-oriented companies, which even have a better profit margin, are companies like H&R Block, American Express, as you mentioned, Wells Fargo, and like lawyers and doctors, these companies sell services that people need and are willing to pay for. But unlike lawyers and doctors, these companies are what we call institutional specific as opposed to people specific. Mm-hmm. In other words, you don't think of Jack, the guy at H&R Block who did your taxes. You think of H&R Block, and H&R Block is a completely recession-proof company because everybody has to have their taxes done. And American Express and financial institutions are very well insulated because they can raise their interest rate, their annual fees, and still make money during a recession. So those are kind of wonderful companies. And then the low-cost provider is Walmart, Costco, Nebraska Furniture Mart, the Burlington Northern Santa Fe. And these are companies that you might have fewer opportunities for career advancement because they really are the low-cost buyer and seller, and they have a lot of pressure to keep costs low. But yet they're still great businesses because they're going to be around. And Walgreens, for instance, has a great program for advancement with the company over a long period of time.
Now, the other thing, too, is that when you find this company is being able to, I guess, find a manager with the right qualities. And Warren was really good about those kinds of things. As far as what he's seen in a manager, it almost likens to somebody who actually loves and cares about whether or not the business is going to succeed or fail.
Yeah, David, do you want to talk about that?
Yeah, the management is very important to Warren in the context of if it's not there, it can kind of muck things up. He always says he wants to invest in a company that even a bad manager will do well in, but honestly, he's looking for good managers and to run these companies. And he wants management that has integrity. He wants management that's smart. He wants management that has their eye on costs. He wants managers that love what they're doing, and that's the most important thing, that they think about work when they wake up in the morning, and they're thinking about their job when they go to bed at night. They absolutely love it. It's the most important thing in their lives. And most of Warren's senior managers are rich enough to retire, but they keep working because they love it so much. They love the game. They love, it's like somebody who loves to be a baseball player. They love being managers of that company. And that's what he's looking for, that passion.
And obsession. I mean, and we write about that in the book. It's, they have to have that kind of passion and obsession. And David's so right. I mean, the managers, and he loves generational management, like the Blumkins at the Nebraska Furniture Mart or Borsheims, family-owned businesses, or A.L. Ucci, who owned Air Flight Safety. He sold the company to Warren, and he continues to run the company even though he's a multimillionaire. Mm-hmm. And that's why they're great managers, because they understand their business better than anyone. And it's really funny because Warren says to them, hey, don't expect, that you have to give me a big, report and so on. The only thing I ask from you is every year send me a letter in case you drop dead tomorrow, who your successor will be, so I won't have to look for a new manager.
Right. Well, that's the thing, is he was really good about buying a company, but with a good manager, management in place, he just stayed out of the way and let them do what they do. In this day and age, that seems to be one of the biggest snags that you'll find in business, especially if you come from a perspective of being an employee. They bring in this manager, they come in, they decide they're going to clean house and change everything that was working without ever once just observing how is this operating and how, if I in fact think there needs to be improvements, can I do this? But everybody just jumps in with their egos, and all of a sudden, because they're managers, they're right about everything and everybody else is wrong, and then wonder why morale is poor.
Well, you hit the nail on the head, really, Daniel, because Warren is the kind of guy that, you know, he's not the CEO or the manager that says, yes, you know, look what I did. He praises all of his managers, and it's a great technique that he learned from Dale Carnegie, how to win friends and influence people. You know, from Andrew Carnegie, he learned that if you have to give someone some criticism, praise them first. Mm-hmm. But in his annual reports, whenever he's speaking on television or in annual meetings, you know, there's nothing, people love to hear their name and love to get credit for what they do. And Warren's the very first person to say, you know, David Sokol is doing such a fantastic job for us this year, and he had wonderful returns in Mid-America, Atlantic, and, you know, he calls people out by name, tells the shareholders and everyone specifics about what that person did, and it's that kind of cheerleader, not slave driver, praise, doesn't like conflict, you know, that he learned. He learned from Charles Schwab and Andrew Carnegie, and he and Charlie Munger even like to quote Benjamin Franklin, who talks about that as well in terms of how to communicate with people in a way that is inspirational rather than dictatorial.
Mm-hmm. Mm-hmm. Now, an idea of a good manager, I'm reminded of a story about Dempster Mills, and this was a place that actually manufactured, it was windmill equipment and irrigation systems, and there was a company that was a real mess there for a while, and Warren took a look at this, and then, you know, this is about picking the right guy for the job. If you wouldn't mind describing that story for us.
David, do you want to tell that, or do you want me to?
I'll tell the Dempster Mills story.
Yeah.
Dempster Mills was a windmill manufacturing company out in Nebraska, and Warren bought into it, thinking it was undervalued. It was selling at below its book value, and he thought he was getting a great deal. But when he got into it, he realized the management was terrible. And he went through all the rigmarole. I mean, this is a young Warren. This is not an old Warren. And young Warren went out there and got into it with the management and got into it with the board of directors, and then he finally got him to change managers, and he ended up with an even worse manager.
Oh no!
Now he's really in hot water because he was the one pushing for the change, and so then he had to get a new manager, and this time he used the recommendation of a friend, Charlie Munger, who Charlie goes on to become his partner at Berkshire. But,
his Siamese twin, as he was called.
Yeah.
And the person they called was is it Henry Bottle, Mary?
Harry, the incredible Harry Bottle.
Incredible Harry Bottle, and Harry was basically a turnaround artist, and Harry was in Southern California, and he spent a couple of years in the turning around Dempster Mills, and he went in and he cut inventory, he raised prices on the products they sold that were unique, and cut around the products they sold that weren't unique, and it actually turned around the company, which enabled Warren to get it.
Interesting stuff. Now, that was the other thing, too, is that as you talk throughout this book, this also becomes more of a personal thing for individuals, with Warren Buffett really giving advice or suggestions on what it takes for an individual to be successful. And as you were mentioning earlier, Mary, one of the things that turned him around socially was reading How to Win Friends and Influence People by Dale Carnegie. and realizing how you can communicate with people, because he was pretty shy and really socially kind of inept, especially when he was younger.
Yeah, he was. He was terrified of speaking with people, and his wife, first he took a course in Dale Carnegie's speaking, first, and then he literally memorized how to win friends and influence people. And during those early years, his wife, Susie Buffett, was really such an amazingly outgoing and sagacious, fabulous person. And she would do all of that kind of socialization that Warren felt he was kind of nerdy and not real comfortable with people. But after he studied with the Carnegie methods, he became better and better, and of course he learned a lot from Benjamin Graham, and then as he began to study other famous and investors and so on, he's a voracious reader. So it was everything from Lord John Maynard Keynes to Philip Fisher, and then of course he came along to Charlie Munger, who we all call Charlie the abominable no man. He's the one who says no more than he says yes.
Interesting stuff. Now, he one thing he really didn't like doing at all, if he could avoid it, was firing people. And there are some managers out there who don't have a problem with it at all. What was his take on that?
Well, Warren's a very sensitive guy, and when he had to close, for instance, Berkshire Textile Mills, which was a textile manufacturing company that the Berkshire Hathaway is named after. It was a bad business. It didn't have good economics working in its favor, and Warren was pouring money into the business, and a lot of the reason that he was doing that was because he knew that the whole town basically worked at the mill. And but at some point he knew he had to be, he was responsible to his shareholders and his investors at the time, and so he shut down the mill, and he took his money and he invested for the first time in the insurance business in what was a small company then, National Indemnity. And I think that gave him the taste for insurance, and now if you look up Berkshire, it's basically an insurance company.
I know that was an interesting story by itself, because that goes back to an area that, especially this day and age, we seem to be facing with our younger generation, which is a sense of entitlement, that people owe them things. And Berkshire, that was exactly what was happening, is the CEO and then his brother were basically running this company with this grand sense of entitlement.
Right.
And it seemed like, just to spite them, Warren bought the company because he couldn't stand the fact that these guys really didn't have a stake in it, that they just felt entitled to be where they were by family name alone.
That is so true. It's very interesting. I mean, I just had I had an interview with the BBC about the Kraft Cadbury purchase, because I was just in Chicago and they were there, and they were asking, why Warren was against that and so on, and I said, among other things, he just felt that the Kraft stock was underpriced, and for Warren to sell, give stock in a deal, he likens to, preparing for a colonoscopy. I mean, it's the worst thing he could possibly do. But what I found out was that Cadbury is such a beloved brand, because it was started by a Quaker in Birmingham in 1824, and it really supports several, throughout throughout the country, and that was the biggest concern that they had talked about. And well, I think Warren's he's sensitive to that, but he also can purge himself of emotion, as he says, and make a business decision about a company.
Mm-hmm. I'm always reminded, too, as you share these stories, both of you, is that of the book by E.F. Schumacher, Small is Beautiful, The Economics as of People Mattered. And to Warren, it was about making money, but it was also about other people being successful as well.
I think any great man, woman, titan of industries surround themselves with people who are either smarter than they are or more talented than they are, and it's a great sign. It's a sign of a great person because their ego isn't so involved in it, and that's what really builds a business besides the underlying economics, which, you really have got to go back. With Warren, it's you have to have those basics. We give 3 little quick tests in Warren Buffett's Management Secrets. We give a per-share earnings test. We give the debt test and the gross margin test.
Mm-hmm.
And in our previous book, The Interpretations of Financial Statements, that was a really fun book to write because David, that's his expertise, and he could show you where Warren looks at a financial statement and what are the kind of secret little things hidden in there that might be just so apparent, but that Warren can pick out, that David can, determine and just go, wow, this company is really great. I mean, just the idea of a gross profit margin, which is so simple, and for your listeners, for your audience, it's so easy to investigate a publicly traded company now.
Mm-hmm.
Privately held is a little more difficult, but with all that you have on the internet available to you, just trying to find out what the kinds of gross profit margins are. It's basic subtraction and division. It's you take your revenue, let's say it's $10,000. You take your costs of goods sold, what it costs you to make the products, let's say it's $6,000, and you subtract that, and you get a gross profit of $4,000. Now, if you want to know what your margin is, you take that gross profit of $4,000 and divide it into the revenue of $10,000, and that gives you a gross profit margin. In that case, it'd be 40%. But if you look at some of the companies that Warren owns and has bought and owned for years, Coca-Cola has a gross profit margin of 60% or better.
Mm-hmm.
The bond rating company Moody's, 73%. Burlington Northern, 61%. And the very chewable Wrigley's Gum, 51%. And if you contrast these excellent businesses and several companies with companies that have poor long-term economics, it's obvious. And Warren always says, he made a joke, he's like, how to become a millionaire is start out a billionaire and buy an airline.
Yeah, exactly.
So, United Airlines, example, has a gross profit margin of 14%, and General Motors is 21%, and the once troubled but now profitable U.S. Steel is not so strong, 17%. So, you're looking at that's really a key indicator of a company that has that durable competitive advantage.
Mm-hmm. Now, one of the big things, too, for our listeners out there, we're talking about Warren Buffett's Management Secrets, and our guests joining us today, Mary Buffett and David Clark. Now, the big thing about Warren that is really important, especially in this world, when it comes to growing successfully, whether it's you by yourself or with teams of people, is integrity was really big about with Warren, being honest, doing the right thing, staying on course. In fact, you were saying in his book there was a neat little quote about arguments. The best way to win an argument is that you have to lose sometimes. And that's the key, is that, it's funny this day and age that so many people tend to have to prove that they're right even if it's the wrong thing. And, integrity really makes a big difference on whether a person becomes successful and can stay there, or can just be a flash in the pan overnight.
Yeah. David, you want to talk about that a little bit?
Because a good example of that, if I may, was the debacle with the Solomon brothers that he was involved with. Oh, boy, that must have really drained him.
Oh.
Well, if they don't have integrity and they're not honest, once they always say, you want somebody smart and with integrity, because if they don't have integrity, the smart side of them is going to steal you blind.
Mm-hmm.
And he's looking for people that are not only full of passion and obsession for work, but are also honest. And in our world, that's sometimes a hard thing to find, and sadly enough. And he looks for it in people. He doesn't find it. If somebody you find that in his managers, he'll get rid of them instantly. He always says what it takes 30 years to build a reputation, 15 seconds to lose it.
Right.
And he lives like that. Reputation is everything. He once wrote a letter to his managers at Solomon Brothers, but he said it to all his managers. He said basically, look, if you lose money, that's okay, but if you lose 1 ounce of our reputation, that's not okay.
Mm-hmm.
And it also goes back to integrity. And when you look at the people that he really thought a lot about and really respected in business, people like Mrs. Blumkin, who ran the Nebraska Furniture Mart, her word was solid. And it was solid even if it meant her losing money. Her word was everything. Mm-hmm. And she did business in Omaha, Nebraska on the basis of her word for close to 60 years. Mm-hmm. And no contracts, just her word. And that's how he likes it. He once said that if you have to rely on a contract to get paid, chances are you probably aren't going to get paid. And so you really want to rely on people's integrity. You want to trust them going in and doing that. So, yeah, integrity.
And he also says, there's so much money that we can make in the game. We don't have to go outside of the court. You don't have to go outside of the law. There's plenty to be made without being dishonest.
I know that was interesting that you bring that up, Mary, because I remember as I was reading a story, especially when he was involved with the Solomon Brothers situation there, that before that you were beginning to see even Wall Street itself change in the 70s and into the 80s with junk bonds. And I remember back in the day when people who were celebrated as heroes such as Ivan Boesky and Michael Milk, and I thought, but all these people are doing is just pushing around garbage money and taking companies and selling them out. And I'm like, what's the heroism there? Because somebody's losing there.
Yeah.
And he always believed in winning in a win-win situation, and that's what we all should learn to create. In fact, he was so good at win-win situations that he could make you a bet, and he would win regardless of how it came out. He even did that with his own children, and I always found that to be interesting. Warren would win either way, But talk about why win-win situations are so important and ways that he would create those.
Well, I think, once again, he knows that sometimes in order to win, you have to lose. Mm-hmm. But you don't really lose because the whole psychology of it is that you either challenge or motivate someone, your managers, your children, your people you want to influence, companies you want to purchase, in a way that nobody likes to feel like they've been taken advantage of or that they lost. Mm-hmm. And I've got to point back again to the influences that he had on him. Charles Schwab was one of the first people who ever made $1 million in salary when he worked for Andrew Carnegie, U.S. Steel. And, even Andrew Carnegie said, I don't really know much about the steel business per se, but he knew about the people business.
Mm-hmm.
And, another quote of Warren's is that you don't have to think of everything. It was Isaac Newton who said, I've seen a little more of the world because I stood on the shoulders of giants. Mm-hmm. There is nothing wrong with standing on other people's shoulders. So you're always feeling like a winner, and I think that's something that Warren instills in the young managers and even the young people today when he holds his Buffett when he invites all these young college students business students from all over the country. And, he always says, look, your biggest asset really is yourself. The biggest asset is yourself and what you can do with it. Whether it's, being a barber, if you're the best barber, then you're the best, or whether it's a money manager, whatever it is, you are your own best asset. And, Dave mentioned Rose Blumkin, and she's a classic example. Here, she was a Russian Jewish immigrant who couldn't read or write, and she founded the Nebraska Furniture Mart in the 30s. And she just had this simple concept of discounting prices in the name of increasing volume. And she her idea of I think she went on a vacation once and she couldn't stand it. She had to get back to the store. And, if she had any time in her day, she'd be driving around looking at what the competition was doing.
Right.
She worked until she was 104 years old.
Right.
So it's it's that kind of thing that's been lost, as you pointed out earlier. A fun fact is Warren Buffett did not even know who Bernie Madoff was. Mm-hmm. And another kind of interesting thing about him is he does insulate himself just like David does. By living in Omaha, they're really able to sit with their brains and sort through the kinds of investments that would be the right ones, and they don't have to hear all the banter of Wall Street or investment bankers calling Warren. I think we mentioned it in the book, and he's like, yeah, I get investment bankers calling me and saying they've got something at 14 times earnings, and we have our own deals. Mm-hmm. My idea from the Tao of Warren Buffett, one of our other books, which I love that book because it's 125 of his sayings, his aphorisms, and then we put a paragraph of what he means. But he's like, my idea of a group decision is looking in the mirror.
Mm-hmm. He was really interesting, and when you bring up Rose Blumkin, she was really quite a tiger herself, and became the largest furniture seller in North America, as I understand. They're right out of Nebraska. And what was funny about her was the fact that, and I say this funny like as in this is interesting, as with all the hard work and the hours that she put in, and she, became very wealthy, is the whole time she didn't feel she deserved it, but she knew that only in America you could do that. And I'm sure that as she was getting older and looking around, wondering, what is it with American people that don't seem to understand what they really have right in front of them?
Yeah. Yeah.
And then Warren felt the same way, as he called it, the uterus lottery, when he was over in China with Bill and Melinda Gates. And here these Chinese people were pulling their longboats upriver, and he thought, see, I could be one of those people. And he felt exactly the same way she did, and it's so strange this day and age that, again, when I get back to entitlement, which is something that really lacks integrity in some ways, is the idea that, well, somebody's just going to give it to me. But the fact is, that's just not how it works, and this is what these captains of industry are trying to tell you.
Yeah. again, it's the idea of hard work and integrity, and it's in this gotta have it now net speed world. It goes back to that short-term, short-sightedness that Wall Street has. It's that short-term oriented mindset.
Mm-hmm.
And, a lot of people, because I spoke to a group the other day, and people who are on my age and David's age, who are certainly over 50, when you talk about, buy and hold for a lifetime or hold for 20 or 30 years, well, people at our age, somebody said, I can't do that. I'm 70 years old. I'm 60 years old. And I said, but the principles are the same, and the principles are what matters. It's because even if you, as long as you can identify a great company with those strong economics, with its durable competitive advantage, let's just take GE as an example. GE went down to, when the recession hit, it went down to $6 a share.
Wow.
Now, GE is not, in 100 years, they'll still be around.
Mm-hmm.
And so I said, for people who are older, you can use the principles that we've set out and that Warren has lived by, and in 10 years, or even less than that, you can make a fantastic profit, and you can get some real profit out of selling,
mm-hmm.
and you may not be able to hold it for 20 years.
Mm-hmm. So
there's always that aspect of it too. And although we don't promote short-term sales, but sometimes you do sell the company because it's hit its peak, or you see another opportunity that's going to give you a better return than the one that you're getting now.
Mm-hmm. Oh, fascinating book here, Warren Buffett's Management Secrets. It's all about just doing the right thing, having time and patience to be able to do those right things, and before you know it, the ripple effect you've created is just phenomenal. And I want to thank both you, Mary Buffett, and you, David Clark, for joining us here on the Beyond 50 radio program. I believe we're going to be having you on again on his reading financial statements.
Oh, yes, that's right.
Mm-hmm.
That's right. David will talk more on that one.
Yeah, David, you've been awfully quiet back there.
Listening to Mary chat. It's good.
Well, again, I want to thank both of you for being on the program, and we'll look forward to having you on again. It's been a real pleasure.
Thank you so much, Daniel. It's a very interesting program, and I love your perspective as well.
Well, very good. Appreciate
it.
You too, David.
Thank you very much.
You bet.
Bye-bye.
We want to thank you, the listeners out there. Again, the book is Warren Buffett's Management Secrets, Proven Tools for Personal and Business Success. Highly encourage you to pick it up. It's certainly not one of the mystical, spiritual ways of beating the system. This is something that you already have these tools within inside of yourself to be able to make the difference and the impact that you wish to make, not only on yourself, but your community as well. We also want to thank one of our following sponsors for helping support the Beyond 50 radio program, and that is HB Neuro. Just imagine what it is like to feel truly connected to your mind as well as your body. If you struggle with such symptoms as ADD, depression, anxiety, or have trouble sleeping, you likely can't imagine it. So break free from old patterns that no longer serve you by retraining your brain. Using the latest technology, holistic brain neurotherapy enables you to optimize the way your brain functions, dramatically affecting how you live. Simply visit www.hbneuro, that's neuro.com. Just like your heart, your brain needs and works best when it keeps the right rhythms. It's time to see what a balanced brain can do for you. I'm Daniel Davis. Thank you for tuning in. Be sure to visit us at our website at beyond50radio.com. That is the number 50, and sign up for our free weekly e-newsletter, as well as visit us at our blog. We archive our shows there, as well as have great hot links and valuable resource information for you and friends to share. We again thank you for tuning in. This is the Beyond 50 radio program, and remember, live your day past halfway.